East Africa Breweries have just released their half-year results, and I'm here to speak with the Group MD, Karuku, to just unpack the numbers and see what they have done and, of course, what it means for you, the shareholders. Let's get straight to the conversation with her. Jen, it's good to see you again.
Yeah, nice to see you too.
I hope, as you said when you were talking about results, it's not too late to say Happy New Year.
Happy New Year. It's not too late. It's not Easter yet.
It's not Easter yet.
Yes, so we can say Happy New Year.
Excellent. And it looks like it's also a happy year for you, because looking at your half-year results, the profits are up, I can see numbers are up. And I just wanted you to just share your insights on how are you feeling as a company with these results. Yeah.
So thank you very much. I think it's a good start of a year because we released our half one results.
Yeah.
And as a management team, we are very pleased about it. There's growth everywhere. There's growth of volume, money, net sales, profit, and dividend as well.
Yeah.
We get to say thank you to our shareholders.
Excellent. And just for the context purposes for the persons who are watching this, we have a 20% increase in profit after tax to 67.9 billion, right?
Yeah.
Excellent. Now, let's talk about some of the factors that you have seen that have contributed to these numbers. What would you allude to their growth?
Okay.
Yeah.
I think the first thing as a business I would say is we are always looking at what the consumer needs, and we are a consumer-first organization.
Yeah.
And I think that is one of the biggest drivers in our organization. I think the other thing is that there's stability within the macros. So if you look at GDP growth across East Africa, it's between 4.5 to 6% across Uganda, Tanzania, and Kenya. And that stability is important.
Yeah.
I think the other one is contained inflation.
Yeah.
Across all the patch, inflation is between 2 and 4%, give or take, which means that we have a lot of food, for example, because inflation for our consumers is really food dependent.
Yeah.
We've been blessed with a lot of rain in the last 18, 24 months, and that is showing up.
Excellent.
Within the consumer space. But I'm not implying that the consumer is not stressed.
Yes.
The consumer is still very, very stressed. And I think the other one is interest rates started to come down.
Yeah.
Not where I would like,
Yes.
but the journey has started. I'm looking forward that we can get a lot more.
Yeah.
And then I think the bigger one is the exchange rates. Remember, I think the last time we talked, we were talking about 167.
Yeah.
We are now 108, 28, 29 odd.
Yes.
And that is good for us, both from a cost of goods input perspective, and the other exigencies or in the business.
Absolutely.
And therefore, if you remember our last half results, we had a lot of finance cost hits driven by exchange rate. But right now, I think we are happy.
Well.
Could be happier.
Yes.
But we are good. Yeah.
I love that. And I just wanted to dig deeper into two things that you've mentioned. First, in terms of performance, when I look at the different markets, Kenya growth, I think it was 9%, Uganda 3%, Tanzania 16%. I was curious to know, this is quite a jump, and I wanted to know what's behind Tanzania's strong performance. Yes, of course, we give commendation to all, but this was quite a leap in itself. What are you doing down there?
Yeah, I think that's a good one. I want to pick up first from we give commendation to everywhere.
Yes.
So I think this is the first time also in our business we are growing. Every country is pulling its weight. So you have Kenya growing 9%. It's huge from a management perspective. We have Uganda 3%, a bit slow, but it's still very good. And Tanzania are hooping 16%.
Yeah.
And I think it's what I keep saying, stick to strategy, stick with your consumers, answer your consumer needs and your customer needs, and the rest follows. So I think in Tanzania it's been driven by innovation, team engagement, and improvements in route to market.
Yeah.
And like I keep saying, though, Tanzania is a place to watch because you have the right population dynamics, you have right resources, and you have a right regulatory framework.
Yeah.
In terms, it's quite stable. So Tanzania remains important for us into the future.
Wow. There's another part that you also mentioned about how the macros, especially on the foreign exchange, has really contributed to where you are right now. And looking at some of the numbers, I mean, you improved from 2.3 billion loss to 1.2 billion gain. And this is quite significant in itself. And I know we were talking at the 160s some time back, and now we have relatively stabilized. I just wanted you to paint a color. How significant is this for you, and what do you hope when it comes to matters, FX and currency? Yeah.
I think it's back to the predictability of the business.
Okay.
Because remember when you're setting, let's say, pricing of a brand. You take care of all your input costs, and your input costs, if the exchange rate is runway, and you're going to make some decisions based on that, on the price of a product, which then is going to go on and hurt the consumer. So stability of FX, stability of inflation, they're all very, very important. And I'm hoping that we are stable improvements, because what will happen is that we'll be able to deliver more from a shareholder perspective. We'll be able to contain pricing, if at all, because the cost of inputs is contained. So it is important. And I think in an overall nature, it affects the cost of doing business in the country. So a well-contained FX rate is very important for business.
Certainly. Still on the numbers again, before we come to the dividends, which is the good news for the shareholders. The reduced levels of debt are commendable. I mean, the fact that it's 51 now to 43 billion, I mean, it's very commendable. And I wanted to ask you, how much is this a pain point for you when you're looking at how you're balancing? Are you okay with the progress that is being made?
We're very happy with the progress we've made.
Yes.
I was just telling somebody else this morning that debt is necessary for an organization because we need to fund our expansion plans. And we need to fund a lot of things in the business. But when you contain it, it means you're also generating a lot of cash within the organization. So then you balance properly. And I think where we're headed to is that we've generated good cash from the organization. We've paid down debt. And we are still able to do what we need from an expansion perspective, be it on ESG, on brands, or on capital expenditure to try and drive more expansion across the region. So we are very, very happy.
Excellent. Let's go to the shareholders. I think you had some very good news for them. There was a 2.5 shillings gross interim dividend, and that's very commendable. And I wanted to ask you your confidence in sustaining this, because I know they're still looking for the full year.
So that's a trick question. I won't tell you how the dividend plan is going to be into the future, but I think what I can say is that going forward, we have to stick to strategy. It doesn't matter how many headwinds we have out there. Stick to strategy, be consumer-centric, and be cost-efficient within the organization, and engage your people. Those are the magic things. And innovate for the consumer. Those are the magic things that we do in the organization that are helping us deliver these kind of numbers. So we have to keep doing that. And hopefully, the outcomes will be good.
I must comment as well on the share improvement and even value for your shareholders as well. And I think it's very commendable. And are you also giving a word on that to your shareholders that this share shall continue on the rise?
I think what I can tell the shareholders that as an organization, and on behalf of the employee base, we are sticking to strategy to make sure that we give you adequate shareholder return.
Excellent. That's very good news as well. I think there's some headwinds that you mentioned about, and just wanted to you to allude to some of the headwinds that you're facing. I think you mentioned one of it being the illicit brews that are coming by and much more. What other headwinds are you seeing, and what's hitting you hard on this?
I think, let me talk about the illicit one. So the form of alcohol, particularly in Kenya, is less than 50%, which means there's a bigger pie out there.
Less than 50%.
Is less than 50%. And that is a significant issue, I think, for the countries, and not just in Kenya, Uganda, and Tanzania. And I see it as an opportunity. If this were controlled illicit, you can bring a lot more into the ecosystem of tax collection. So it's a headwind for us because we're not able to compete effectively or compete fairly. I think fair is the word. And therefore, I think that's a big one for us. And I guess these are conversations we have continuously with government in terms of what can we do, or what can the enforcement agencies do to make sure that we are reducing this untapped potential from an even tax revenue perspective for the government, as well as health and safety. Because some of this stuff is not quite healthy for the organization. So I think that's one. I think the rest is, to be honest, we're in a VUCA world. Right now we are hearing there's a Ebola in Uganda. Who knows where that is going to happen?
That's true.
So I think VUCA is a reality in our world. But the challenge we have as an organization is, how do we deal with those VUCA issues and tensions that come our way And my answer is always stick to strategy, and the rest will be okay.
Jane, you must admit the tax policies that we have around have affected your consumers' pockets, not just you, even just in general in the country. And I don't know how some of them having low disposable income to do this, because I tend to think most of them probably would look at some of the products that you offer as a bit of a luxury. So when it comes to striking down, you might be the first ones to suffer. However, how has this what have you observed over and across the policy changes that we've seen, especially in the tax and the pockets of your consumers?
I guess illicit is one.
Yeah.
Pushing more people into illicit.
Yeah.
But the one we are seeing in the organization is the premium business and segment growing faster.
Yeah.
Which means that people who are sort of have less stress from a disposable income perspective are continuing to enjoy our brands. So I think you saw the segment is grown by 11%, is the fastest growing. So I think that those would be the two things that I would call out.
Yeah.
That probably are signs of what you're talking about.
Okay.
Yeah.
As we come to a close of the conversation, I have seen you talk a lot about the innovation, strategy, and even sustainability, which are quite significant, especially right now. We're talking about operating in an environment in a way that is conducive. And I just wanted you to allude on the two areas, especially on the innovation and how it's working, to your strategy, and also sustainability, because I've seen you're quite focused on ensuring that you're operating sustainably.
Yeah. So let me start with the innovations. It's always very exciting to talk about innovations. I talked earlier about us being very close to the consumer. And we know the consumer is changing all the time. The dynamics are changing in terms of what they want to enjoy, how they want to enjoy, and where they want to enjoy it.
Absolutely.
So because we're very close to that, then we're able to innovate, be how we deliver it to you, route to market. And this morning I talked about our digital platforms.
Yeah.
Being very progressive in terms of making sure that when you want a drink, you have it.
Yes.
And I think the other one is what you want to drink. So for example, the last few innovations in the last 6 months, which have been very successful, is Manyata. I think there's a group of consumers who love Manyata.
Okay.
And then the tequilas. There's a tequila explosion.
Okay.
Whether it is Casamigos or Don Julio.
Yeah.
So I think it's just understanding what this consumer needs are and then answering to them. And we have more coming. I mean, right now we've just launched Timao Gold, so wheat beer. I think the first of its kind around this market. Please look out for it.
Yes.
We have Nairobi Summer.
Yes.
Very exciting innovations coming out of our microbrewery. Yeah, so have a watch out for those.
Okay.
And then from an ESG, I think we are a 100 years old company.
Yeah.
And we have to make sure that we give the next generations EABL in a better space.
Absolutely.
For the next 100 years. And that's why we are investing in ESG. So I think previously we brought you around to see our what is it called, biomass?
Yes.
It's really kicking, so helping us to manage also the costs of steam generation, planting trees. We are very big on water conservation, whether it's Karura, Mount Kenya, etc., etc., and many other things on diversity and inclusion, and recently bringing people ably different within our ecosystem, be it in the office or in the farming community.
Okay. Yes. Finally, what is your outlook like? And I know you've alluded to it when you're talking to shareholders, but just looking ahead, some of the biggest risk or opportunities that you're seeing as you continue to really deliver on your strategy.
Yeah. So I think what I can say to the future, we'll continue to do what we always do. Just stick to strategy and make sure we are listening to the consumer, because if you get those two right, then the rest just falls in place.
Yeah.
Yeah.
I know I never prepared you for this. You're always thinking numbers, but just curious. What do you do to unwind?
Golf.
Thank you so
much.
Answer. No, it's a good answer. I know.
Right, okay.
I thought you'd think about it. You already know it.
Yes, yeah.
There you have it. That is Jane Karuku, very optimistic of the future, and even for the shareholders and even the share itself. And of course, giving credit to the entire team of EABL for making this happen. Thank you so much for your time. I leave you now with the markets. I'm now joined by Sylvester Othiambo, who is a research analyst at Dye & Blair, to help us understand how the market's been, especially on the equity side. Sylvester, thank you so much for joining me. How are you doing?
I'm doing well. Thank you for having me.
Excellent. maybe we could start by a general overview. How is the markets doing, especially in terms of trades and participation?
Okay, the market has been doing well.
Yeah.
The equities market has been on a rally, which has been sustained coming into 2025 and
Mhm.
started in 2024. Yeah.
Excellent. Let's get straight into the week on week, and this is the Monday to Monday for our viewers. And I wanted you to just make a comment because when I looked at some of the top gainers and the top losers, quite some interesting names there. Looking at the top gainer being Home Africa with a whopping 49.3%, and a bit of some losers there. I can see South Africa Cables and many others there. What's your comment, especially on the gainers first?
Okay, so on the gainer side, we've seen much movement in the penny stocks,
Yeah.
led by Home Africa. Home Africa recently reported half-year profits after a long while of just reporting losses. So this news has really sustained its rally, positioning investors, especially speculative investors, on its future performances. Yeah. For the
Excellent.
other gain,
Yes, go ahead. Go ahead on the others.
so on the other gainers, Uchumi has been mainly speculative, no substantial news backing it up.
Mhm.
Standard Group has mainly been on a restructuring course, especially with the appointment of the new CEO.
Mhm.
So mostly speculative also into what the restructuring process might bring into the media company.
Yeah,
Housing Finance recently just completed their rights issue. So
you're
they
right.
had ailing capital issues.
Mhm.
But the good news of them actually securing and having a rights issue that was oversubscribed has really kept faith in the investors, enabling it to rally. And
Mhm.
also East African Portland Cement, their full year results bounced them back to profitability, and they issued a dividends, which really improved the investor sentiment around the company.
Excellent, excellent. And of course, we have the losers. I don't know whether there's one or two stocks that you can comment about. Anything significant?
Not that much significant. I can say Transcentury,
Yeah.
which was recently on the up and up. It
Mhm.
seems like investors are now taking profits. That's why
Okay.
it's one of among the top losers. But it recently just also announced its half-year results, booking
Mhm.
in a profit after a long while of just posting losses.
All right. So what would be your comment on the share index? I see the NSE 10 is up, NSE 20 as well, NSE 25, all of them averaging between 1.2 to 1.5%. What does that mean for the market?
So what that means for the market is we're still in rally.
Mhm.
Generally, in all aspects, the general market has risen in terms of market capitalization,
Yeah.
meaning that prices have gone up generally.
Mhm.
So the indices just are a proof to show that the rally is still ongoing week on week.
Excellent. I'm so fond of seeing when I look at the top movers, there are some usual names that I see there, but it's interesting to
Yeah.
see housing finance, and I think you can allude to what you've just said. I can also see
Yes.
Kenya Re as well. I see
Yes.
Kengen, I see Kenya Power, and Safaricom. Most of the common ones are not there. I'm seeing a lot of new entrants. So what are you observing?
So what we're observing is starting with housing finance, just as I said,
Yeah.
the company, after completing its rights issue, has
Yeah.
really been on the positive side with investors, so that they're trading it more.
Mm,
Kenya Re, after last year, they issued a bonus issue,
okay.
which saw the price come down and it being heavily discounted.
Mhm.
Given the current market conditions, which is in rally mode, we've
Mm,
seen more and more investors positioning themselves in insurance companies,
yeah.
and it being among the cheapest insurance stocks, it's really
Mm,
been traded a lot.
yeah.
For the power companies, they've just
Mhm.
recently released their half-year results, which
Yeah.
is Kenya Power and Kengen.
Mhm.
So their half-year results were really good.
Mm,
That's boosting investor confidence in them, and that's why they are among the top movers.
mm,
And our major power there, Safaricom, always among the top movers,
mm.
heavily traded. Yeah,
Absolutely. You're right. And of course, let me take this moment to also, a lot of viewers, next week we have an exclusive with the Chief Executive and MD at Kenya Power. He unpacked the numbers and they did super well, as you've heard from our analyst today. I want to close by asking you the interest rates, because we have seen a lot of announcements coming in, especially from the CBK and all that. How is this playing around the market?
So we've generally seen a wave of easing monetary policies globally due to inflation now being contained. So since last year, August, the CBK has been cutting its main interest rate, which is the CBR, the central bank rate. As of last week, the CBK cut the CBR by another 50 basis points down to 10.75. So generally what we can see is with the rates coming down, we've mainly seen money moving around in the markets, in that it's moving from the fixed income down to the equities. That's why we've been, it's also a contributor to the rally that has been ongoing, but it's positive for the equities market if rates are coming down.
What do you think? How is this trend going to go? The rally is going to go on, as we're seeing in the next months?
For the next few months, especially until March, I expect the rally to continue. Since we have many companies releasing their full year results in March, especially the banks and the insurance companies. So I expect especially the income players, people who mainly invest to get dividends from the companies, to come in and continue boosting the prices.
Okay. We're just near the release of the full year results for the banks. What are you observing? What are you hoping?
So as of last year, the banks had, as of their third quarter results, all banks were on the up and up, especially in terms of profitability. So most investors expect a good payout this year. We saw some key players such as KCB coming back to issue dividends. We also expect a finalization of some news, especially with the sale of NBK in KCB. And also all the other banks, especially in terms of interest income, given the high interest rates experienced last year, they're able to book in much interest income revenue. So we do expect that to fully show in their results in March.
Excellent. That is Sylvester Odhiambo, research analyst at Dime Blair. Thank you so much for your time, Sylvester.
Thank you so much for having me once again.
Excellent. There you have it on the markets. A lot of things and positive things to look up to. I leave you now with the numbers. Thank you so much for your time.